thing. Well, let's go on to Goldfields, because maybe this is one of the ones where you're going to be relatively going the other way. So this one is a diversified producer of gold with operating mines. More than 50%, I think, of its production now comes from Australia. That's mines like St Ives out in the Western Australia, couple of 100 kilometers to the right-hand side of Perth. Remember, Goldfields split itself in half some years ago by breaking out the Sibanye assets, which is what we'll talk about subsequent to this. So what we've got left in Goldfields is just South Deep, the most important remaining South African asset by volume or scale of gold assets anyway, about 81 million ounces down there out in the Carltonville area. But Nick Holland today runs this group, which has a net market cap after the split of about 38.4 billion rand. Also been very wild, as Gary said, with market caps flying up and down with the share price. Price to earnings ratio is 111 based on recent results. Dividend yields 0.8%. Okay, so at least they're making profits. As far as it goes, though, South Deep appears to be a bit of a perennial disappointer, notwithstanding how exciting the asset is. They can't make any money out of it.
I remember chatting to Nick Holland, we were discussing South Deep, and there was a lot of excitement around it because it's meant to be a highly mechanized, low-cost mine. It really was. It was the crown jewel of Goldfields' South African operations. Yeah. They spun out, Sibanye, and they were left with that. The problem is now they've actually, they've had sort of 4 months of delays last year because of, that, it was a ground reinforcement project. It took a lot of ounces out of production. Then at the same time, they've really struggled with the mechanization aspect of it because of the skills in South Africa. They don't actually have the engineers to do the mechanization and the capital available to invest in it. So it's, it's been a tricky one for them. South Deep really has been a bit of a drag, and but overall, yeah, like you say, Goldfields, it's still a huge producer. It's produces around 2 million ounces, and it's got huge diversification. So it's in Peru and Ghana and West Africa and all over the place.
Okay, again, we've got the share price on chart. So what's interesting about it is it starts off 2015 really well on the back of I don't know what, but in the most set of recent results, that really not looking great with that slide from around 70 rands a share, I think, to about 50. You can't really see the scale there. So clearly the market has taken a bit of a dim view of the concerns around South Deep, given that they've now pushed out again the time frame within which they expect to achieve that level of production.
No, definitely, and I think also, we've had a fall, and again, after a nice recovery in the gold price, and a lot of the precious metals in the beginning of the year, that metal price has come off. So, inevitably, Goldfields is still going to be linked to that gold price, and with, last weekend we saw sort of a $40 slide in the gold price. You're going to see Goldfields coming off on the back of that. It is unhedged and so very geared to the gold price. The one interesting thing I did see on it is, how it relates to the oil price slide as well. Yeah. There was a sort of a footnote in one of the annual reports saying that the oil price slide, it makes no difference to them whatsoever because of the jurisdictions that they operate in. So if you look at Peru and Ghana, they follow an oil price stabilization policy. So even with the falling oil price, which has helped all the rest of the gold miners, it's actually hindered them because they haven't seen the feed through. So that's one interesting thing on hedging in the company.
Okay, going hot or not on Goldfields?
Yeah, this is one that we're not hot on. So we think this is a good one to short against the likes of AngloGold.
Okay, good. So we're both going not hot on Goldfields. Okay.